Hi everyone, welcome back. This is the Preparing for 2022 Paper 2 YouTube video / podcast. Hopefully that Paper 1 video helped. Certainly the comments I received suggested it did. This one's not quite as easy as to predict, I don't think. I think quite a few of the things that I went through with students in Paper 1 actually did manifest themselves in questions. This one's a little bit more complicated. I'll explain why, but we're going to do the same things we did in Paper 1 video. We're going to break down the content covered. We're going to talk about how the paper's structured. I'm going to give you some key bits of advice for success there. Those bits of advice are largely going to be the same as they were in Paper 1. And then we're going to go through each each area from the pre-information, the advanced information, topic by topic. So this exam is a lot of these topics are numerical based. There won't be that many numeracy and calculation based questions. Certainly in years gone by, we've typically had 2 on each paper in a Paper 2. But a lot of these topics are topics that could come up as calculations or could be essay questions, which means there's quite a lot to be prepared for in terms of both being able to do a bunch of calculations and being able to write essays based around numerical information. So if we have a look at the theme 2 topics, you've got break-even, budgets, profitability, liquidity, and capacity utilization. Literally all of those they could be 4-mark calculation questions or they could be essay questions. Then in theme 3, we've got SWOT analysis and impact of external influences. Now those 2 are definitely going to be essay questions. Quantitative sales forecasting, in theory, could be a question that uses data. But given the range of other options for that, I suspect that sales forecasting is just going to be another essay question as well. And then ratio analysis, which is interesting that ratio analysis is there because we've got 10 questions, we've got 9 topics, and yet profitability, liquidity, and ratio analysis are pretty much one topic. I know when I teach it, I typically teach profitability and liquidity in year 12, obviously, and then when I teach ratio analysis in year 13, I'm pretty much reteaching liquidity and profitability because ratio analysis is effectively all of the profitability calculations, all the liquidity calculations, and then a couple of extra ones that are in the AS specification. So it's quite interesting that some of these topics are potentially going to have more than one question, or you might get like an essay question about liquidity, which I'll cover later. I would think maybe a candidate for that could be something like impact of external influences, which is quite a broad topic. So there might be a chance that you get more than one question that touches on that. Now, they've also given us some quantitative skills there, which doesn't really give us a huge amount of clues, although the fact that it says construct and interpret a range of standard graphical forms, that suggests that there's going to be some sort of graph. I wonder if perhaps that could be a break-even chart that you might have to read. You wouldn't have to draw one, but you might have to read one. And then it says also calculate cost, revenue, profit, and break-even. That could be a profitability question where you're calculating a type of profit, which you might need for a profitability ratio. Or it could be that you actually calculate break-even based around the information that's in the chart. So we'll go through each of these, but before we do that, let's have a little bit of a think about how this paper is going to look. So this paper, structure-wise, is exactly the same as Paper 1. You've got 2 sections, 50 marks each, 1 hour each for a 2-hour paper, and each section is 4, 4, 10, 12, 20. I'm not going to go through this in a huge amount of detail. I did this on Paper 1, and what I would suggest is if you want full breakdown of this, there's a playlist of YouTube videos and a series of podcasts from a couple of years ago about the exam structure for each of these questions. The only difference is I've basically switched to using the 10-mark structure for the 12 markers as well and just tried to get a little bit more depth in my howevers and conclusions. But, 4 markers, 10, 12 markers, and 20 markers, they're all the same as they were in Paper 1. So have a look at the Paper 1 video at that section a couple of minutes in if you want a little bit more information on that. But in order to save time on this, I'll skip through it now. Now, I've talked about these in Paper 1 as well, but a couple of Year 12 students asked me the other day when we were in a lesson, we were studying business failure, and I shared with them an article from Forbes magazine that talked about the 5 key reasons businesses fail. And one of them kind of made a little comment to say something like, how great would it be to have a top 5 reasons business students fail in their exams? And so I kind of just instinctively wrote one on the board, and those 5 things that I'm going to talk through that are on the screen are the 5 that I came up with. So knowledge is the fundamental need. If you don't know what a key term says in a question or what a key term means in a question, you are going to struggle to answer that question. So if you get a question about, if you get a question about an operating profit margin and you don't know what that actually says or how to calculate it, you're kind of screwed before you even started. So you need the knowledge. Obviously, that has to kind of be the foundation of your exam skills. But I do think it's pretty much 50-50 in terms of having the knowledge and having the exam skills, which is what the rest of these are about. So thinking about structure, and what I mean by structure is knowing how many paragraphs you need, knowing whether you need a conclusion. Balance links into that. So my third point is balance, meaning even if the question says assess, if it was an 8 marker on paper 3, assess 2 benefits, you have to put 2 limitations in there for howevers, otherwise you don't get your evaluation marks. You need to balance those points. And if that means assess the impact, do positive impact, negative impact. If it's assess the importance, do is important / isn't important for you, however. And then application, we'll talk about this plenty of times, but application is absolutely key. My belief is that you need, obviously, number 1, you need knowledge, but 2, 3, and 4, if you're missing any one of those 3, you're going to struggle to get much more than half marks, which means you're going to struggle to get more than a C grade. But if you get all 3 of those things in, so if you've got your knowledge and you get your structure, your balance, and your application, in my opinion, you're pretty much guaranteed to get a C, at least. And you'll probably get a little bit more than that. So I think those kind of 3 work together. They're all part of the structure. But having them all is really, really important if you want to be successful in these exams. And then the last one is timing. And I think timing is probably the thing that I would say students find the most challenging. If you've got the other things down, you probably have quite a lot to say. And so be really, really careful with your timing. I've said that try and work at 1 mark per minute and pay attention to the clock as you go through the paper. I know that when I used to do exams, I used to always take my watch off and put it on the desk. And I just would check it. I would just glance at it every few minutes just to make sure that I knew how long I was spending on each question. I don't know if you're even allowed to have a watch on anymore because of smartwatches and the potential cheating there, but certainly there'll be a clock in every exam hall. So keep an eye on it and be quite kind of very careful with your timing and make sure you're paying attention to 1 hour per section. However, whatever order you do your questions in, make sure you pay attention to your timing. Now, I mentioned this earlier, you'll probably get at least 2 calculation numerical based questions, but there'll be 4 markers. So 2, maybe 3, because it says at least, I think it's at least 10%. So you could potentially, over the course of the whole 3 papers, I believe. So you might even get 3, but typically it tends to be 2. 4 markers will be like written questions, and then you'll have 2 calculation questions at least as well. And there's loads of topics, I've already mentioned, that loads of topics that could be calculation questions. And this is a summary of what they would ask you to do. So make sure you know that you can do all these things. Can you calculate break-even output or margin of safety? Can you calculate variance? Can you calculate all your profit margins? Can you calculate ROAS? Can you calculate liquidity ratios, current ratio and asset test ratio? And can you calculate gearing ratio? And do you know what those mean? Because you might have to use them in an essay. And can you calculate capacity utilization? Which means for all of those topics, and we'll touch on this as we go through, you need to know, first of all, the calculations. And you need to be able to do the calculations quickly because you don't want to waste time on a 4 marker. And you need to know the theory behind them to be able to write an essay, because it's quite likely that, some of these are going to have to be essays. And so knowledge of the theory behind the calculations is incredibly important. So let's start with one of those. We're going to do this in spec order. So we'll start with 2.3 break-even analysis. So as I've mentioned here, being able to do the calculations is obviously really important, but you also need to know the benefits and limitations of doing break-even analysis. So on the left-hand side, you can see there we've got the 3 calculations. We've got contribution per unit is the selling price minus the variable cost per unit. And what that means is how much of your revenue from 1 unit contributes towards paying off your fixed cost. That's why it's called contribution per unit, because every time you make a sale and you've paid your variable costs for making that sale, like the direct costs, the remainder, the contribution per unit, is going to contribute towards paying off your fixed costs until you've reached your break-even output, and then every contribution is going to be profit. So then your break-even output is fixed costs divided by contribution per unit, and that is basically how many units you need to sell to reach your break-even point where you make no profit, no loss. And then the last of the 3 calculations is margin of safety, which is your actual output minus your break-even output. And that just tells you how far above your break-even output you are. Now, I would expect if it's a calculation question, and it might not be, It's either going to be a complicated break-even output calculation, in which case maybe it is involving reading a graph, and that's the thing that makes it a little bit more difficult. Or it might just be presentation of data, in which case it's probably more likely to be a margin of safety question, because to be honest, just a straight break-even output calculation is a little bit too straightforward for A-level, so they're not going to give it to you that easy. So if it's a calculation, make sure you know those and make sure you're prepared for that. But you also need to know why break-even is important. So I've put some benefits here as well. It's really helpful for target setting, and this is especially important for new businesses, because for a new business, survival is going to be the main aim, and the way you survive, well, one of the ways you survive is to reach a point where your revenue covers your costs. And if you've done that and you're also able to manage cash effectively and have cash available, then you are going to survive. So interesting to see whether in the case study, if it's an essay question about break even, whether the business is new and therefore obviously survival is their aim. You can also use it to assess the risk and reward of new projects or new items that you're trying to sell. For example, calculating how many you need to sell to break even. You can then potentially identify whether that's realistic, how much, how likely it is that you're going to be able to do that. And also you can easily calculate this and amend it to show different what if situations. So you can say, for example, what if fixed costs increase? What if variable costs increase? What if we change our selling price? What impact does this have on our break even output? And it's just quantitative data that helps decision making. And so again, in the case study, is there something that suggests that their costs might change, in which case maybe use that as part of your application. There are some limitations though, of course, as well. Quite often, if you're selling one product, then you've got a selling price and you've got a variable cost per unit. But if a business is selling more than one product at different price points, which is incredibly likely, then you might have to use average revenue or average variable costs, which can mean that it's a little bit more unrealistic. And so that can be a limitation of break-even analysis, because it gives you an average number of sales you'd need to reach to break even rather than a specific amount. It's also vulnerable to external shocks. For example, anything that could change your costs will have an impact here. Anything that could change your ability to make that contribution per unit. For example, increase in inflation, for example, increase in your buying costs could have an impact on this. And of course, anytime any of those things change, you might as well just rip the whole analysis up and start again. Doesn't take long to do, but it just means that it can be quite vulnerable. It also assumes that everything you've produced is sold, and we know for a fact that that's just not the case. If you go into Next, for example, and you're looking around at the clothes in Next, what you are seeing in front of you is just a ton of things that have been produced, and therefore variable costs per unit have been spent, but they haven't been sold, so there's no revenue generated. Whereas a break-even analysis chart, if you're looking at the output line on the x-axis and you see that says 1,000 units, well, that's 1,000 units of variable costs and therefore total costs, but it also is assuming that you've received revenue for all of those, and that's not necessarily the case. Quite often a business will spend a lot of money in variable costs well before they receive it in revenue. So it could be a calculation question, in which case it could be break-even output or margin of safety, or it could be like an impact or importance of break-even analysis to a business, in which case you would use those benefits and limitations. The second topic is 2.2.4 budgets, and this is much in the same vein. You've got to make sure you know how to work it out. Fortunately, it's actually just subtraction basically, and then identifying whether the answer is good or bad. So in terms of a calculation question, it couldn't really be any easier. And it's worth noting that every budget calculation that we've seen so far has asked students to calculate the profit variance, in which case you're just looking at a table of data, calculating the two profits for budget and for actual, and then working out the difference and working out whether that's good or bad. So the table to figure out kind of whether it's favorable or adverse. With revenue and with profit, we want our outcomes to be above budget. That suggests that we've made more money than we expected. Obviously, for costs, it'll be the inverse of that. So if your costs are more than budget, that suggests you've spent more than you wanted to, which is obviously an adverse outcome. Now, there's a little bit of and this is where you would potentially come into this if it's an essay question. It's not quite as straightforward as that, because, for example, if you save money on costs by finding a cheaper supplier, then in terms of budgeting, that would be favorable because you've saved money on your costs, but that might have a really negative impact on your quality, in which case, while it's favorable from a budget perspective, it might actually be a negative generally to the business. So there's all sorts of kind of other contextual factors that need to be considered when you're thinking about budgets. But there are a bunch of benefits as well. First things first, they can be used for target setting and measuring performance. And you can do this whether this is for a business as a whole, whether you do this for managers and key members of staff, or even just kind of employees in terms of setting them targets. Or you could do it for departments within a business. You can then link that to pay. So for example, we talk about motivational, and these targets, you know, a budget is effectively a target, and a target can be quite motivational if it's something that people can realistically achieve, and potentially be linked to pay. So potentially be linked to bonuses. Commission is effectively a form of reward to a budget. In effect, you meet a target or you make a sale, you get a percentage of that sale. But it also allows you to potentially identify weaker areas within your business and look for inefficiencies. So if you've got a budget kind of analysis, a variance analysis for your entire company, you can easily identify the areas in which you haven't been able to meet those budgets. Now, it might be that the budgets weren't set appropriately in the first place, and we'll talk about some of the limitations to this in a moment. Or it could be that actually maybe just management in that area is weaker, and therefore by maybe addressing that, you can potentially save yourself some money and potentially as a business make more profit. But there are some limitations here. When we said that they can be motivational if they're realistic and achievable, the opposite is true if they're unrealistic. So set someone a target that they know they can't reach, and it's just going to demotivate them, especially if there's money tied to that, or performance and promotions and what have you attached to that. But they're also incredibly vulnerable to external shocks. It's not black and white. There's loads of really valid reasons why you might not meet a budget. For example, you think about the revenue budgets for every restaurant in the UK over 2020. I'm willing to bet that pretty much every single one of them failed to meet their revenue budget and probably their profit budgets because there was a pandemic that meant that their restaurants were closed for 8 months. So it's quite realistic that sometimes external factors might mean that you don't meet a budget. But they can also cause division within a business as well if workers or departments end up competing for sales, for example, in a car showroom. Maybe their pay is tied to performance related, to performance actually. And then if they don't get that sale, they look worse compared to their colleagues. Rather than thinking about the best thing for the business, they might be thinking about the best thing for their own interests. And sometimes that can cause division and cause a negative culture. Sometimes maybe they're trying to get a slice of the certain budget for their part of the business or their project, and there's only a limited total budget, and therefore you might get division and sort of resentment through that. There's a load of potential reasons. The key thing is making sure it's linked to what is going on in the case study. So if it is an essay question, make sure you're aware of what the situation is for that business and why a budget might be useful. I would say maybe something along the lines of assess the importance of budgeting to a business or something like that, but learning these bullet points is useless if you don't apply to the case study, so make sure you use the case study effectively. Might potentially require you to read and interpret a budget to answer an essay question. It's not likely that they would ask you to calculate something to use in an essay question, but they might give you a table to read. It could be a 4-marker, in which case I would expect profit variance, and if that's the case, then get your calculation done in about a minute. Make sure you're really, really careful. Make sure you've said whether it's adverse or favourable, and then move on with the 3 minutes you've saved for the other questions that'll challenge you a little bit more. But practice it. Go back to past papers and have a look at some of the profit variance calculations. There's been 2, I think, that are worth having a look at. And I think there's been 1 question as well on budgets that hasn't been a calculation question. So I think it was about giving people who were managing different divisions their own budgets, and the one reason why the business might do that. They were all 4 markers. So make sure you know how to work out variance. Make sure you know how to interpret a table of budgets. Make sure you know the difference between favourable and adverse, and then the benefits and limitations of budgeting. I think it might be an essay question just because there's not a great deal of obvious other options for essay questions, and so I'd make sure you're prepared for both. Now this topic's a bit bigger, so I'm gonna combine 3 of these here. I'm gonna combine profit, liquidity, and ratio analysis. Now it's quite plausible that you get a calculation question here. It's also quite plausible that you get an essay question here as well. As we mentioned, there's only a certain amount of topics and there's 10 questions, so some of them are going to have to come up in different ways, and this is a really easy one to do that with. Not necessarily for profit, which is what I'm going to talk about in the first bit, but certainly in liquidity. So a few things to know here. There's a lot of calculations to know. Make sure you understand what each of those calculations, how to do them, and what each calculation means. Make sure you know how to get your marks on a 4 marker, so writing your formula and showing you're working out. And usually they go to 2 decimal places, but just be careful and read the question and see what it's asking for. And if it asks for 2, give it 2. If it asks for 3, give it 3. So check the word in the question. If it's a calculation, are they just asking you to calculate something, or are they asking you to calculate something and then comment on it or compare it to something else, or calculate the change between it? And if it's change, is it change or is it percentage change? And there's like a bunch of different variables there to make sure you read the question really, really carefully. We saw that on paper 1 with the case study with that market share question, where they'll just put something in there to make it a little bit more challenging for you rather than just remembering a formula. And so expect that. But the other thing to think about is how hard do they make it to get the information? So if you have a look at the statement of comprehensive income on the screen, you'll see there we've got the standard kind of pro forma: revenue, cost of sales, gross profit, fixed overheads, operating profit, financing costs, and net profit. But they might not give you cost of sales. They might not give you fixed overheads. They might instead give you like examples of cost of sales. So they might say, for example, instead of cost of sales, they might say material costs. Instead of fixed overheads, they might say operating expenses, or list some expenses. In which case you need to kind of make sure you understand what all of those terms mean. Don't just blindly revise the formula. And typically it's worth also just mentioning, when it comes to profitability, the higher generally is the better. But I mean, obviously most businesses want to make more profit, but it's also worth bearing in mind that different businesses will have different levels of gross profit margins and operating profit margins, etc., based on the way they finance their business. So if you take, for example, the example I always use is a barber's or a gym. I went to the gym earlier today. When I go to the gym, there are no cost of sales for the gym, for me going in there. Everything that's there for when I go is a fixed overhead, like their rent, their salaries for their staff. All of the equipment's already purchased and all the utility bills are already paid. There's nothing that they consume for me going. If I didn't go this morning, they wouldn't have incurred any more or less cost. So a gross profit margin for a gym where they have very, very little, if any, cost of sales could be as high as like 96, 97%. And a barber's the same. If I go to a barber's to get my hair cut, everything that is there that they are using is already going to be there. It's already going to be paid for, whether I go or not. Other than arguably like a couple of pence worth of electricity to charge the buzzer and whatever, and if they put any product in, a couple of pence worth of that. But again, another business that might have a really high gross profit margin. And some other businesses, they spend loads on their cost of sales. Some businesses make a really low gross profit margin but have really low fixed overheads, and so as a result tend to make a similar profit. So just bear in mind that they're not all directly comparative. You can compare businesses within the same industry if they operate the same way together, but you can't typically compare between industries. Now this question, again, calculations here, and it's the same structure with this table. It says that the table structure is always the same in terms of order, so it's worth just bearing in mind that if you get one of these tables and it doesn't say specifically non-current assets, current liabilities, they will be listed in order. You've just got to figure out where they start and stop. So we've got non-current assets, current liabilities, non-current liabilities, net assets, which is all assets minus all liabilities, and then total equity. So it's worth just remembering that it might show examples of current assets like cash, debtor payments, or receivables or inventories. They might give examples of non-current assets. They might give examples of current liabilities or non-current liabilities instead of like the overall group, or they might give it just like that. And then the bottom section, total equity, is the internal finance, which is provided through their share capital and their retained profit. And that actually is really, really important, because if you are asked about gearing or ROCE, you need to use total equity and your non-current liabilities to get your capital employed. But I'll talk about that in a moment. Now, I think there's a chance you could get a question about liquidity in general. So something along the lines of like, assess the importance of liquidity to a company, in which case you're focusing on the importance of cash and the ability to raise cash. So it might well be, I'd say this, I try and stress this with students all the time. A business can make a profit without having any cash if their profit is based around credit, where they haven't received money yet, or they've had to pay for things before, pay for supplies before they receive revenue. They can quite easily find themselves in a situation where over the next few months they know they're going to make profit, make revenue, but if they don't have cash, you can't pay your bills the following week. So if that's the case, make sure you're looking at the case study for examples of what their liabilities might be and their cash position. But I think it's potentially potentially on the table that you might get a liability question that's an essay. So well worth being prepared for that, and make sure you understand the kind of concept of liability and why cash is so important, and what assets and liabilities mean in terms of a business being able to raise cash. Now there's a series of calculations here. I've grouped a bunch of them together. So we've got profitability, we've got liquidity, we've got financial efficiency, and then in the bottom right corner I've just put that capital employed calculation that you're going to use in two different calculations. So I'll come to that before I do ROAS and before I do gearing, but I'll just go through the more straightforward ones first. The first is the profit margins. Now I've linked these all together because there's three: gross profit, operating profit, and net profit. But the calculation is just profit over revenue times 100, and you just substitute whichever type of profit for profit in that equation. And this is the percentage of the business's revenue that is kept as either gross, operating, or net profit. And again, obviously, as you go through those, so your net operating profit will always be lower than your gross profit. Your net profit should always be lower than your operating profit. You want the higher figure as possible. So profitability-wise, we're looking for a higher figure. For liquidity, the two calculations are current ratio and asset test ratio, and these calculations are very similar as well, not very difficult to remember. Our current assets divided by our current liabilities which is our current ratio, shows us how many pounds of current assets we have for every pound of current liabilities. Mainly, if we think about our current assets being the things that are either cash now or are going to become cash in the next year, how much do we have in terms of near future cash for every bit of near future debt that we have? And the ideal for that would be between 1.5 and 2, suggesting we've got more current assets than we've got current liabilities. Obviously, we want more assets than we've got liabilities. And then the asset test ratio is exactly the same, but we take away inventories. And what that leaves us with is our highly liquid current assets. So what I mean by highly liquid, I mean reliably going to become cash. And inventories are discarded from that because there are very many reasons why a business might not sell their stock. For example, if their stock is food-based, for example, it might be perishable. It might only have a certain shelf life, and therefore if you don't sell it within a certain window, you can't sell it and it gets written off. Of course, it's already been paid for. It could be that it's based around trends and fashion, and as fashion changes, you might find that certain items of clothing or fashion items or accessories can't be sold because of it, and that could be the case for trends as well. And then with technology becomes obsolete, and so as a result, if you're sitting on a load of technology that you can't suddenly sell because it's gone out of date, I mean, there's a reason why you wouldn't overproduce something like an iPhone or a PlayStation, because it has a shelf life. And for an iPhone, for example, the shelf life's very, very slim before they start moving on to the next piece of technology. And so as a result, you can find that these products get obsolete very quickly. So we take away our inventories to make sure that our asset test ratio just shows us our liquid current assets, and the ideal figure for that is about 1 to 1.5. So just slightly more liquid assets than we have current liabilities, and that should mean that a business won't struggle to pay their bills when they become due. They'll always have cash available or be able to raise cash quickly. The last two calculations, the more complicated ones, these are the ones that we introduced in year 13. They both require capital employed, which means they take from, for example, for ROAS, that takes from both financial statements. So capital employed is the total capital invested in the business. That's going to be our internal capital, which is our total equity, so our share capital and our retained profit, the money that the shareholders have put in. And then it's also going to be our external finance, our external capital, which is our non-current liabilities, which are basically our long-term loans. And so add them together, and that's the total amount of finance that's available for a business, the total amount of finance that's invested for a business to use to kind of try and make a profit. So the first calculation is ROAS, which is in the same way that our profit margins with the percentage of our revenue that is kept as profit, this is the percentage of our capital invested that is returned as operating profit. So this effectively is, if your business has invested a certain amount of money, you want to know how much you've made of that as in profit, and that's what that tells you. So I think externally, if you were searching on Google like the profit of a company, you'd probably find their operating profit, and you'd look at that. That's kind of like the headline published figure. But internally, I suspect the business is probably more interested in their ROAS and how much they've had as a return from their investment. The second of the calculations to require capital employed is the gearing ratio, which is basically non-current liabilities divided by capital employed. So in effect, it's non-current liabilities divided by total equity plus non-current liabilities. And what that basically tells us is, of all of that finance we've just talked about, that capital employed, what percentage of that comes from debt? Now, there isn't a perfect answer to this, There's what we consider highly geared, which would be over 50%, which means a business relies quite heavily on loans. And there's risk with that because you have to pay interest and it's debt, of course, and it has to be repaid. And then you've got low gearing, which is what we'd say below 25%, which means you don't really rely on loans. And then I guess normal geared would be between 25 and 50. But it's fine to be over 50% as long as you can make the payments. That's fine. As long as you're comfortably operating within your capacity and you can make these repayments, then there's nothing wrong with working at a high gearing. Even some businesses, like you'd think, for example, you think about a business like Apple, who generates so much profit that you could make an argument that you probably would never need to actually take out a loan, but they still will have like a gearing percentage. They'll have a gearing ratio because they've got access to the finance. They can presumably get a decent interest rate, and so if you can gain access to the finance and then maybe use more of your kind of internal finance to give back to the shareholders, then why not do it as long as you can pay it back? So there's a bunch of calculations there. My best bit of advice would be find some ways of practicing them. Make up some figures to fill in the tables and then calculate all of the ratios you can. Now, the next topic is about capacity utilization. This is an interesting one because this comes up in both paper 2 and paper 3, and it's one of the reasons why I'll wait until after paper 2 to record the paper 3 one, because I'm really interested to see what they do in paper 2, and then so I know kind of what they probably won't do in paper 3. You won't get a calculation question on paper 3 because there are no 4 markers. Now, you might get a calculation question that you have to use in an essay, but I do wonder if the fact that it has to be in an essay in paper 3 means that maybe it's a bit more likely to be a calculation question in paper 2. But, that's just a guess. Who really knows? It wouldn't be out of the question for them to ask different types of calculation questions or essay questions. If it is an essay, just make sure you're aware of kind of the concept of capacity utilization and why capacity is really important. So the impact that having a high level of capacity utilization has on your unit costs and therefore your profitability, ability to set your prices. So I would have a look at like the case study, make sure you know whether there are any any information in the extract that suggests that they're going to maybe be at max capacity, maybe they're trying to expand their capacity, or maybe they're trying to do something with their profits or their prices where having a higher capacity utilization and therefore lower unit costs might be of an advantage. So those are the kind of things I would have a look at. If it is a calculation question, the calculation is fairly straightforward. Actual output divided by maximum output times by 100, and that is the percentage of the maximum capacity that they're currently producing. I don't think it would be as straightforward as just getting you to calculate that once. There'd be some little caveat in the question, maybe something else you'd have to calculate first. Maybe you'd have to work out the actual output or the maximum output. Maybe you'd have to do it for 2 different years and then compare them. We've seen that before, actually. We've seen a question where you had to calculate 2 capacity utilizations and then talk about an implication of this. So it's really, really important to understand the theory of capacity utilization as well as the actual calculation. Now, this is one of the 2 obvious essay question topics, the SWOT analysis. And I think content-wise, it's going to be really, really easy because the SWOT analysis is really, really straightforward. There's one thing to bear in mind. I mean, first of all, you need to know that it's strengths, weaknesses, opportunities, and threats, but I would assume everyone will know that. But you've got to understand that the strengths and weaknesses are when we think about now, like the current position of the business, what are the strengths and what are the weaknesses. And sometimes, by the way, a business having a weakness is not a problem if that weakness is in an area where it's not a huge priority. And so it's worth just bearing in mind that, because what you are going to find here is the case study is going to be absolutely massive for this question. If they're talking about SWOT analysis, which might be a specific question about an opportunity, a threat, a strength, or a weakness, or it could be more general, there has to be examples of SWOT factors in the extract. You've got to find examples of strengths, weaknesses, opportunities, and threats. And I would imagine opportunities and threats is probably going to be quite an easier one to find in the extract. But to be fair, all these examples should be easy to point out. Opportunities and threats are for the future, like focusing on what opportunities are in their future, what they potentially could take advantage of, or what potentially could be a threat to them. And so it's just worth bearing that in mind. I mean, I've written in the bottom corner there, key things to know: what SWOT stands for, and that strengths and weaknesses are current and opportunities and threats are in the future, and that's basically it. So I don't think the content is going to be quite the challenge in this question. The challenge is going to be, how are they wording the question? Is it specific or is it general? And are you going to be able to use the case study effectively to make the right points and identify the right points about that business? this is the other essay-based topic. This is the other obvious essay-based topic. Now, I think this one might come up more than once, actually, because there's quite a few things that you can focus on with external influences. I've put two theories here. Pestle factors and the pestle analysis is the first, and then Porter's 5 forces is the second. I'm not going to touch on these in a great amount of detail, but it's also just worth bearing in mind that, for example, some of the ones in the pestle factors, like for example, if it was a question specifically about legal or political, legal or economic, you would expect 2.5.1 and 2.5.2 to be also mentioned on the advanced information. Similarly with ethics and environmental ethics, depends on where you read about pestle, you'll find different second E there. But if it was about ethics, would you see business ethics? Because business ethics, legislation and economic factors, they're all in theme 2 and theme 3, so they would plausibly be on this paper, and none of them are mentioned. So perhaps that could mean that it might be like a question about political or social or technological. It could mean that it might not be about pestle in general anyway. It could be more about Porter's 5 forces, but it's just worth bearing that in mind. So make sure you know what the pestle factors are and how they impact both positive and negative, because remember, we need balance on a business. For Porter's 5 forces, just make sure you know what these 5 forces are and what you're looking for in the extract when it comes to examples of this. Now, Porter's 5 forces is effectively 5 factors within a market that will make it more difficult for a business to compete. Like it will make it either easier if these factors aren't that strong, or it'll make it more difficult. So for example, the first one in the middle, rivalry amongst existing competitors. Well, if there's a great deal of competition amongst the businesses within the market, if maybe it's a saturated market, there's quite a crowded market, and there's a lot of businesses that have different levels of differentiation or cost competitiveness, then that can make it more challenging to compete because there'll be established brand loyalty and what have you. The threat of new entrants, how easy is it for new businesses to enter the market? And that could be in terms of cost of setup, for example. Some markets are really expensive to set up in because of the buying costs and the levels of like specialized equipment and knowledge that you need. It might make it quite difficult to start a new business. And so if there's limited barriers to entry, then you might find it's quite likely that new entrants will join the market, and that means you're at more risk, those external influences, of them affecting your ability to compete, stealing market share from you and what have you. For threat of substitutes, is there an alternative for consumers other than the product that you're trying to sell or the service you're trying to provide? So if you think about, for example, like trains, for example, well, there's a bunch of alternatives, isn't there? You can drive, you can fly depending on how long the journey is, you can get a boat depending on where the trip is. There's a bunch of other alternative options. If you've got a few days, you could walk or even cycle. So there's a lot of substitutes in that market, which means that you have to be right on with your market mix, because if you're not, then consumers might use other options. And then when it comes to bargaining power, think about who's got the power in the relationship, and with bargaining power, it typically comes down to, first of all, quality and quantity. So if there are very, very few suppliers of a product or suppliers of a resource, then the supplier is going to have power. Whereas if there's numerous suppliers, so that if you're not happy with the agreement you've got with one, you can just go to another, then the supplier's got less power and you've got more power. And the same goes with the buyers as well. How many customers have you got? What percentage of your sales go to the same group of customers, because that will, and how many other options have they got? Because if they've got loads of other options, they could potentially go somewhere else. So I think this is going to be another essay question. I think this potentially might be more than one essay question. I would be looking for the potential link with concepts like Porter's 5 forces and pestle, if it's not specifically mentioned in the question. But when there's not as many essay questions on here, I think there's a chance you get an essay question on like a specific Porter's 5 force, one or two of the forces. Could even be a 20 marker where you've got to talk about which of two forces are mentioned is the most important to a business. And so I think this is a theory where that kind of key knowledge of key terms is going to be really important. So be prepared for both of these things. Be prepared for an external influences in general question. Be prepared for like a specific external influence question. But hopefully from the case study, it'll be quite easy to find this information. Now, this is the last topic on the paper 2 in terms of numerical order. Now, I think this is going to be an essay 1 as well. Potentially they could give you some data to read. They could potentially give you a calculation if they were giving you a moving average calculation, but that's so unlikely. They've only done that in the past when it's been a essay question on paper 3. So first things first, be aware of what a quantitative sales forecast is and the different methods of doing it. So moving averages, extrapolation, and correlation. So moving averages trying to flatten out the fluctuations in data that are usually caused by seasonal or trend-based sales to try and gain an idea of what the actual trend line is doing. Extrapolation, looking at historic data and trying to identify a trend based on the historic data you've got. So for example, you would look at why your sales have been going and you maybe you'd extrapolate that around to kind of get an idea of where your sales are likely to go. But of course, there's so many external factors and internal factors that could change that. And then correlation as well, identifying where one factor leads to an increase or decrease in another, or maybe where there's no correlation at all. So it's actually, you potentially could just get a straightforward question like, assess the value of a sales forecast, in which case it's quite a boring question, but just make sure you're aware of the benefits and limitations to forecasting your sales. So again, use the case study there because you'll be able to find some information about the sales that they make and something about their predictions for their sales and why that might be helpful, certainly if they're setting targets. But try and make sure that your answer is specifically linked to the case study, because it's very easy with a question like that to just kind of give a fairly kind of standard textbook answer. So make sure you're using the case study really effectively on this one. So that covers all the topics on paper 2. Hopefully you found this helpful. After paper 2, I will do the paper 3 one once I know I just want a little bit more information about what's going to happen with that capacity utilization question. And so hopefully you find this useful. If there's any bits of advice or any questions, just chuck them in the comments, because I was hanging around in the comments for a little while to try and answer some questions that some students had, and I'll do that as well, especially in regards to structure. But check out the other videos on structure on this channel, and good luck. Make sure your half term is productive, the rest of your half term, if you're watching this and it's still half term, and keep working hard.